The recent turmoil in the US stock market is far from a doomsday signal. On the contrary, I believe it's an extremely positive development, a priceless health checkup the market has handed to each and every one of us. You've probably seen all sorts of analyses listing 9 causes or 10 reasons, stirring up anxiety. But after watching this video, you'll gain a completely different perspective. Why is this a good thing? Because this volatility has forcibly administered a fever reducer to an overheated market. The most critical finding is this: the rules of the market pricing game have fundamentally changed. For over a decade, especially after the pandemic, we've been playing a game of blind bidding. The key was who had the nerve to bid higher, because everyone knew the Fed's liquidity faucet was wide open. With more money flooding the system, asset prices naturally soared. You didn't need to worry too much about what your holdings were actually worth. There would always be someone willing to pay an even higher price later. But yesterday's movement, especially with Nvidia, which nosedived from sharp gains to negative territory after releasing stellar earnings, was like a clear signal. Click. The game has changed. It's now open card valuation. Everyone must now keep their eyes wide open and carefully examine the true quality of the assets they hold. Do they really deserve their current prices? This transition will inevitably be sharp and painful because it's bursting the bubbles built on the illusion of endless liquidity. In this market health report, 3 key indicators are flashing red, and they're worth a deep dive. Keycap 1. The immunity of market leaders is failing. Take Nvidia, the global AI bellwether and a bedrock of market confidence. Its price action yesterday was highly symbolic. Blockbuster earnings, yet the stock reversed from gains to losses. What does this mean? It means massive profit-taking selling pressure has completely overwhelmed the buy orders from those optimistic about its future. This isn't about Nvidia's fundamentals. It's about the shift in the market environment. When the strongest fortress begins to crack, you know the wind has changed across the entire battlefield. Keycap 2. The market circulatory system is impaired. That is, liquidity. According to Goldman Sachs real-time data, market depth deteriorated sharply. Simply put, the market's ability to absorb sell orders has become extremely fragile. What used to easily absorb $10 million in sell orders can now be rocked by just $5 million. It's like a robust individual whose blood has suddenly thinned. A minor impact could now lead to severe bleeding. That's why even the slightest trigger can cause such dramatic intraday reversals. The market's cushion is gone. Keycap 3. Overreaction and herding by algorithms. In other words, synchronized selling. A large portion of today's trading is driven by algorithms, such as CTA trend-following strategies. These systems don't care about fundamentals. They only react to technical signals. Once a stock falls below a key trend line, programs automatically trigger sell orders. This selling is mechanical and indiscriminate, creating a reflexive downward spiral. Program selling drives prices lower, which triggers more program selling. It's like a modern army made entirely of precision gears, highly disciplined and unified in action. But the downside is, once the front line shows a breach, the entire system can fall into temporary chaos due to a chain reaction.